Good afternoon, guys. It's Saturday, December 4th. My name is Dave Coker, and this is Talking About Finance. Excuse my voice, I've got a little cold. It's not the COVID kind. I swear, I've been double vaxxed. If you do get infected, if I have the variant that can be spread by YouTube, contact me. I'd like to hear about that. All right, let's start out as we usually do by looking at the markets. And interesting week. S&P 500 actually traded up on Monday. Things were looking pretty good on midday. Went to teach a class and oh my God, Omicron hit. So SPX got hammered, tried to bounce back Wednesday, but by the end of the week it was down about 1.2%. The VIX traded up to 3067, squarely above the 1 standard deviation level, which is 27.5, close to a 2 standard deviation move from the long run mean. So watch 35.5. Many believe, some of my friends actually think, that would be a strong buy signal if VIX actually pumped up that high. The 10-year traded down to 1.35%. Oil's down to 66.39. It dropped about 2.6 on the week, but it's up 36% year to date. In any case, I ain't selling my oil stocks, like the dividends. So this market, it seems to have been the action last week seemed to be all about Omicron. Many of the U.S. fundamentals are still bullish, but why might this time be different? You know, that's the 4 most dangerous words in investing. Well, medical advances in knowledge. So yeah, there's a new variant whizzing around, but we've learned a lot about how to control it. And also we've got medical advances. We got a vaccine. So I've got great optimism that this time might be different in terms of lockdowns and the damage to the economy. Another thing, the third point is, in the US, household finances are robust. My gosh, there's about 2.3 trillion in excess savings deposits since the pandemic hit. So again, I think we'll see this market, and I've said this before, trend up towards the end of the year, and hopefully it'll continue, the momentum will continue into 2022. It'll be really interesting to see. All right, here's an interesting one. And again, the media is all abuzz about Jack Dorsey leaving Twitter to go work on Block, as it's called now. It used to be Square full time. But there's a fundamental message that most of the media is missing. And this went into my research report to my clients this morning. Quite a bit more words and some other stuff that I don't bring into this presentation because this is very quick. But effectively what's going on, if you look what Zuckerberg is up to, he's now got a company called that's focusing on the metaverse. Dorsey just left Twitter. The owners don't want to be associated with social media anymore. So reasonable question, why should you? Check this out. I got the Qs in the S&P 500 up 25%, 22% year to date. Facebook really underperforming, 14%. And Twitter seriously underperforming. So once again, why in God's name do you want to own that garbage? It doesn't pay a dividend, so I wouldn't go anywhere near it, as you know. Here's a fascinating one. Now, if you've got stocks in the States, oh God, my throat, I'm so sorry. If you've got shares in the States, stocks, I wrote a paper years ago, about 12 years ago. You don't really own those stocks. They're owned by Depository Trust and Clearing Corporation. And what happens is they give you economic benefit. So you have the economic benefit of the stock. So effectively you're the owner, but you're not really the owner, if you know what I'm saying. In any case, DTCC has pioneered something called Project Ion. And what they're doing is they're using distributed ledger technology for settlements. So guys, get ready. We're going to go to T+0. Right now we're at T+2. Yeah. So it's pretty interesting that I think they're going to push to T+0. It looks like from reading the PDF, you can find it if you search for it. If you take a look at the PDF, it looks like they're going to trial it at T+1 and then push into T+0. That is fantastic because right now, you buy a stock on Monday and you really don't own it until Wednesday and the funds are deducted until Wednesday. So it's actually pretty cool that we're migrating there. And one thing you have to do when you're in the markets is you really want to watch what other people are doing. And by that I mean, I hate to use that phrase, but it's on Bloomberg, so I can. And you can actually look this up if you've got access to a Bloomberg terminal, the Smart Money Index. And what they're doing is they're looking at institutional investors. They're looking at what insiders are up to. And yeah, the smart money bailing on the market for a while now. So it'll be interesting to see exactly where this goes in the longer term. I'm still bullish on stocks, but then again, I'm wired a little bit different than many of my buddies and many of you perhaps, because I don't invest unless it pays a dividend. If it doesn't pay me a dividend, I ain't going to own it. And we all know, and you've heard me mention this before, and I do get mails about it. No, I don't believe you. When you say you're a trader and you make money all the time, I don't believe you. And simple reason. I asked one of my friends over at Deutsche, she's got my job over at Deutsche Bank now in risk management. I asked her just out of curiosity about the equity traders and professional equity traders at a tier 1 institution. They're only right about 55 to 60% of the time. In other words, they lose. So anybody mailing me and bragging about they never lose money in the market, you're full of it. I don't believe it. And it's the same for people that I interact with. I just don't say anything, but somebody says, yeah, I'm a day trader, I'm a swing trader, I've never lost money in the markets. Don't believe them. Professionals lose money in the markets. It just is a fact of life. You take a position that moves against you, before you can punch out, you've lost something. Now, this is an interesting one because we know in the States, they've been buying assets like crazy. And we were talking about this on the Telegram channel the other day about the balance sheet. The balance sheet's getting really, 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 really big. And it all began back in the global financial crisis. Look at the left-hand side. It all began back in the global financial crisis, 2007 to 2008. They bought a whole bunch of assets, and we were promised that they'd repair the balance sheet. They'd be selling off as soon as they could, and they just kept buying. And no wonder those stocks in the States, stock market in the States is going up, right? Look at this. They're buying assets. And they've really expanded the definition of what they're buying now. We won't go into it in any great detail. You can Google it up if you're curious. But in any case, guys, look at the balance sheet. And what could go wrong? Oh, no, that's perfectly fine, isn't it? Yeah, that's a little bizarre to actually say that. Oh, here's one. This came out overnight. I haven't heard too much in the news about it. I got to tell you, the Chinese are righteous. They really are. Here's why. They've told the principals of Evergrande to, repay debts using their own money. They're not going to get a bailout. And I think that's so radically cool. We could learn a lot from those people, honestly. And now they've put out this press release. And actually, they told them that, about a month ago, maybe 2 months ago. Now they put out this press release, Evergrande, overnight. And there's concerns about the company as an ongoing enterprise. They actually might go bankrupt. And yeah, I'm not going to cry about it. Chinese aren't. Why should I care? Will it ripple globally? Well, you hear a lot of people talking about that. I don't really have a view on that, because I don't invest in garbage stocks. I don't buy themes and names. I buy dividend-paying stocks. I do get static for that sometimes from my friends. Let's take a look. I've got some interesting information here. And they were giving me a hard time in Telegram, and a couple of my friends do this as well. And my friend Leah over at Credit Suisse, this is from some internal stuff, I think. I'm not sure where she got it. But we've got decades, 60s, 70s, 80s, 90s, 2000s. We've got the S&P 500 price growth, the earnings growth, the dividend growth, and the consumer price index, inflation essentially. Check this out. You can see dividends tend to grow fairly robustly over these decades. Guys, if you're buying things and you're getting capital gains, that's cool. You really should look at dividends, though. Dividends are like where it's at. And you can actually get a mix. I mean, I've got some stocks, some dividend-paying stocks that are up several %. I've owned them a long, long time. I'm thinking Welltower that I bought at about $1.41 a share, currently trading at about 80, I believe. 80. I don't really look that much. All I look is for the cash flow. Pays an excellent dividend. And the share price just keeps going up because of management's actions in that regard. And because the share price keeps going up, the dividend keeps going up as well. And what happens is it still yields about 6 to 7%, even though my purchase price is much, much lower. And my current yield on the purchase price is well over 100% per annum. So check out dividends. There's nothing wrong with dividends, guys. They generate cash flow. And as I shared with you, I achieved financial independence the first time by purchasing dividend-paying stocks. And I'm still financially independent. Don't get me wrong. Sometimes when I say that, people say, what happened? Well, I'm doing it again with property, because this portfolio I've got in the States that generates cash flow throws off lots of cash every month. And then the issue is, what do you do with it? Well, for about 20 years, I would take the money every month, plus some money from my paycheck, and buy more dividend-paying stocks. But a while ago, I started to realize I've got too much in the stock market. You do need to diversify. And I started building up the property business, which I've been building up over the past 2 decades, actually. Fairly large right now. And now the property business is almost to the point where we can live off that cash flow as well, post-tax. And when I mean that, I don't mean survival. I mean about 5 to 7 times what it costs us to live. Because then you realize the cash flow, you pay the taxes, you've got money to live on, you can still enjoy life, you can go do things. Oh, and you can invest more and buy more cash flow generating assets, specifically houses. So it does lots of good stuff when you buy dividend paying stocks. And this is wild, yesterday I should say, I bought Bitcoin as one does on Friday. Every Friday morning I buy Bitcoin. Trade went through, no worries. And I go to sleep. There's a minor correction. It was trending down during the day, but I wasn't getting really worried. I go to sleep and my gosh, look what I woke up with. Absolutely incredible. Well, remember that cash flow I was telling you about from the portfolio in the States? Been piling up for a few months. I was thinking about buying some more dividend paying stocks if there was a real whack in the markets. I'm bringing the money over. I brought it over this morning, actually. And I'm going to go in large on Bitcoin, substantially larger than my normal weekly purchase. So it'll be an interesting time. And once again, open book here. I'm buying Bitcoin. I buy Bitcoin every Friday. I'll be buying Bitcoin today. And you can see how well I did or how poorly I did at the end of the time. All right, guys, that's it. I hope you have a great week. It's going to be really good. Market's going to trend up. I'm very convinced of that. I might be wrong, but I don't see any reason for these markets to go sideways, let alone drop further. So a lot of capital sitting on the sidelines. I know a lot of my friends are gearing up to go in sort of hard, and other ones are watching for signals to see if things are fairly priced for them. So once again, you're going to have a great week. You're going to make lots of money, not only this month, this week coming up this month, but the year as well. 2022 is going to be excellent. Just keep the faith. Take care, guys. Have a great weekend.